All right, everybody, here we go. Welcome back to Stocks the Numbers, and I wanted to do just a quick broad overview here on Allegiant Travel Company, symbol ALGT, listed here on the NASDAQ. Shout out to Shane, who actually mentioned this in the Discord several months back. Stock was down here in the very low 40s. As we see now, it's in the low 80s. So, phenomenal call and mention by them, and stock is up about 100% just over the last couple of months after they bottomed them out and brought them to new lows of 36.09. So let's see what's going on. First of all, this is a leisure travel company, and if you go to their website, you can book you can book flights on their site. As we see, look, it asks you where you want to go, and if we look, we go to like destinations here, and look at this. We can go to Vegas, we can go to Florida, Myrtle Beach, right? They'll pick you up at certain places. They'll bring you, look here, from all these places. Look, from Flint over to Orlando. So basically, these are domestic flights, obviously. That's first of all. And I'm looking at this a few different ways. So we'll get to the numbers and everything. First, my theory, real quick. Um, Technically, the business is growing over the last couple of years. Obviously, COVID didn't help, and you can see that the revenue took a big dip in 2020 and then had a bounce back really since then, as you see. 1.84 billion in revenue in 2019, 2020 sub a billion, and then back to 1.7, up to 2.3 for last year, a little over 2.5. And the company, of course, profitable over the last couple of years. If we switch over to the last couple of quarters, again, you can see we were on the up and up, even went net income positive in Q2, and now we took a big dip down, not only hurting our revenue, but of course our profit margins as well for Q3. Technically, the company cites Hurricane Helene and Milton and some other factors like that. So kind of understandable if they had a softer quarter there, a little less foot traffic, if you will, passenger traffic, I guess you call it. But technically, the business doesn't look too bad. And we have a market cap right here of about 1.5 billion. They reinstated the dividend. They were paying the dividend and then obviously kind of lifted it after the lockdowns, but now it's been reinstated, and we can see it's currently yielding about 3% right now. The EPS was on the up and up, beating estimates 3 quarters in a row, and then obviously missing, going negative that last quarter. Again, we were on the up and up, had a rough quarter. But let's look at the numbers real quick. Okay, so yeah, you can see how the dividend pulled back into 2020 and then was essentially suspended, and we can see how we come back in 2023. In my opinion, that usually is a good sign. If a company, again, these were unforeseen circumstances, and there were travel restrictions. So of course, a company like this is going to take the brunt of the hit. So they obviously kind of made sense that they had to cut their dividend. But again, to see it reinstated, in my opinion, is actually a very good sign. If we look at the debt over the last couple of quarters, 2.39, 236, 235, 231, 228. So technically slightly going down in that debt quarter over quarter, which is a good sign. If we look at last quarter here was Q3. So if we look at Q3 of last year, we can see something like the free cash flow was almost minus 200 million. And now we fast forward, we're at minus 28 million. So a lot of these numbers moving in the right direction. Cash basically the same. We were back here at 306 million cash on hand. For last quarter, 290 million cash on hand. So not seeing big changes too much in a few of these metrics, but we do have short-term liabilities technically outweighing short-term assets, and we have the inverse on the long term. If we switch over here to the balance sheet, we can see that assets were climbing up to almost 5 billion and then slowly tick down the last 2 quarters back to 4.9, back to slightly sub 4.8. Liabilities went up to about 3.6 during that high and has since pulled back about 349. So almost in line, the same pullback in assets with the same pullback in liabilities for the most part. And we can see that equity got up to almost 1.4 billion and has kind of been hanging out in the low 1.3s, and now for last quarter exactly 1.3 billion. But the good thing is we can also see that the book value per share climbed up from the high 60s into just about the mid 70s and was holding that 72 plus range, and now pulled back to slightly sub 71. So I will say this. First of all, in the immediate short term, yes, unforeseen circumstances, natural disasters obviously may have thrown the company for a loop. You're not able to, send out flights. People don't want to travel, I guess. And obviously, you have a soft quarter. But also, usually airline companies, the stocks are volatile in the sense that they look at fuel costs, right? And the higher fuel costs are, obviously, the less profits that the airline would make. So now the fact that we have Trump coming in on the heels of, supposedly we're going to start drilling domestically and he's going to bring energy costs down. So if now the cost of fuel per flight is going to be less moving forward now, something like ALGT may be primed to actually start showing us greater profits again. And we can see that, again, when the revenue was building up, we can see that they were essentially flat, slightly negative, and then they went slightly positive 2%. So if we fast forward roughly a year from now, if we're able to bring oil down and the price of fuel down, then technically this company should be able to maintain or even see increases in revenue while simultaneously seeing these net margin percentage probably start climbing up and inching up 3.5%, 4.5%, 5%. So in my opinion, over, the next, I'm talking like a year from now, but technically, if the business doesn't change and they continue to expand, which they say they have, they just received, I think, an aircraft from Boeing. They extended the contract, I think, out to like 2027. They have, more aircraft coming in, which probably means more flights. They also mentioned, I think they added like a bunch of locations and destinations. So they're trying to expand rapidly here domestically. And it's good too, because hypothetically, if, heaven forbid, something again popped off overseas, this company wouldn't be affected because we're talking about domestic flights from New York to Vegas, whatever, California to Florida. So we're talking about strictly domestic flights. And again, if under Trump, fuel costs come down, that should technically be good for ALGT. But if we look at the numbers, just looking at the numbers, we can see about $2.25 billion in debt, $300 million in cash. We subtract that, we're at about minus $2 billion. We come over here, we can see total equity 1.3, so we're at about minus $700 million. If we look strictly at last year, we can see $2.5 billion. They brought in $100 million. That's about positive $2.6 billion. Minus the negative $700 million brings us to about $1.9 billion, quote unquote, fair value, in my opinion. Current market cap, about $1.5 billion. So in my opinion, you have about potentially a 30% upside here. So if we turn around in, a couple of months and the stock continues to climb up and all of a sudden it's at $100, $108 a share, in my opinion, I would not be shocked. And in the numbers, I actually do kind of like this one. However, in the technicals, it may run into some resistances. But here overall, I'd say $1.5 billion is a decent value for this business right now. But again, fair value, in my opinion, it could definitely go higher. Price to sales sitting here at 0.58. Yeah, it's basically in line. Price to cash flow was up above 5 at one point. Yeah, it's kind of hanging out. Price to book here, 1.14. We can see we're up at 1.7, even 1.3 at one point, which is why I'm saying we can continue to potentially run up and test those resistance trend lines we'll get to in a second, and we can get up above them potentially and get to $100+ a share, even in the short term. But again, I feel in the long term, I feel we have a little bit more value here. The enterprise value supposedly is what another business would be willing to pay for this business. And you can see the enterprise value is a touch below $3 billion, which is essentially double the current valuation of this company, putting shares roughly at about $160 a share. Now, again, the enterprise value is not set in stone, but, it's something that we like to look at. Our return percentages all recently went negative. Our gross margin percentage is now the lowest it's been going back the last several quarters, but we know again that this was a rough quarter for the company. So we see them taking a hit. It looks like this is the softest quarter, if we're talking seasonally, for ALGT. So it seems like even this time last year, as you see, the gross margin took a big hit, going from the high teens, 20 plus, down to 7.6. But then the following quarters, look at how it was ticking up, right? So I would say, in my opinion, probably give them the benefit of the doubt And if we didn't have those natural disasters, then chances are these numbers more than likely would have been in line with where they were, or potentially even higher. But, again, I'm sure a lot of people may have kind of counted them out when they saw how much of a hit they took in 2020 and maybe how they initially struggled in 2021 to immediately get back to where they were. But now we can see technically that the revenue is much higher than where it was just a couple of years ago. So, again, it's rough with these airlines because in the long term, you may see growth, you may see value. But again, in the short term, any natural disaster, any high rise in fuel that week or something, it always eats into these airline stocks. That's why, in my opinion, even something like American Airlines, Delta, sometimes they're very, very difficult to time. But ALGT again did make a nice comeback there from new lows up to over 80 a share. Operating margin goes negative. Again, it's hard to judge it based off the last quarter. So, again, technically the stock has been climbing still, even though they reported some rough, volatile numbers. So that's why I feel like, again, people are kind of looking ahead. They're kind of looking at this last quarterly report as potentially a scratch. And even though, it may have affected their profitability or some of their margins because, again, they had less traffic because of the disasters, at the end of the day, they technically did beat on the revenue side. So that's why, again, we can't just immediately tank the company back down to $35, right? Because, again, it's not completely negative. But EBITDA, again, takes about a 50% hit, still sitting positive. And we can see the net margin percentage drop down to negative 6.5%. But I do have a feeling, again, in my opinion, that these numbers will improve over the next year or so under new administration. All right, our debt ratios are basically hanging out. Yep, and we can see, again, look, 19, 2020. Look, the last payment just a couple of weeks before everything. Oh no, pay date was right here. Yep, 3/12. And when did all that happen? Like the third week of March or something, right? This is right around when all of those lockdowns began to happen. So obviously they suspended the dividend, and then you see we kind of picked up where we left off, almost back to the same payment, but we did at least start paying it out in the second half of 23, coming into 24. And again, the EPS was a miss, but the couple of quarters before that was actually pretty good. Okay, I have a scroll, even though it's not showing me. And if we look annually, though, technically the company is beating on the EPS estimates on the annual side since 2020 over the last couple of years. Again, revenue technically did decline. I believe it was about 565 million maybe this time last year. But I mean, if your passenger traffic dropped 9-10%, and again, you're dealing with hurricanes and whatnot, to only come in with a few million less, in my opinion, actually isn't really a big negative at all. I think that was actually a pretty strong quarter for them to report this number, dealing with all the issues they had. But we can see moving forward that Q4, we're expecting a little over 614 million, which is technically a slight increase year over year. And going into Q1, we're looking to break that 700 million mark, which is roughly about 50 million more than where we were Q1 of this year. So it seems like we're looking for the up and up, and even Q3 of next year, we're expecting about 643 million. So they're expecting more revenue, and reason being is because if we look at the news, we can see that they recently, I believe, got a new Boeing aircraft. They extended the contract with Boeing. They're looking to add more aircraft to obviously take on more passengers, and they're expanding their destinations. But we can also see that an insider just sold a big chunk of stock as well, because, again, the stock technically went from the mid-30s up to above 80. So this person decided to take some of the money and run here. Sold a significant portion of his holdings, 38,700 shares, weighted average between 81 and 85 and a third roughly, total sale of almost 3.25 million. Following these transactions, Gallagher's direct ownership in the company stands at 2.137 million shares. So technically sold a big chunk of shares, but still holding over 2 million shares. So, I don't know how much of an issue that is. UBS upgrades Allegiant. Yes, but why are you showing me average price? Why aren't you showing me what UBS said? I mean, that's literally the title of the article. But anyway, Allegiant Travel Company has an average rating of hold and a mean price target of 71.08. Again, basically right around that book value that we just looked at. Stock roughly 10 points higher than that average price target. Allegiant Travel Unit extends Boeing aircraft delivery agreement to 2027. Amended a delivery with Boeing, giving the aircraft maker 2 additional years to deliver 50 737 MAX jets. This is why the expansion of this business might not happen for maybe like another, year and a half, 2 years. However, it does seem like they're looking to explode, in my opinion, in value, because again, they're currently generating some good business in my eyes just off of the handful of aircrafts that they have. So if we're really looking to deliver 50 more jets to them over the next couple of years, I mean, we're talking about really branching out and stepping our business up. So we may even see, doubles, triples in revenue here over the next year or two in this company. The new pact, which amends a December 21 deal, moves the delivery deadline for Boeing to the end of 27 from the end of 25. The amended agreement also provides for other benefits and considerations related to delivery delays in 24. The company accepted delivery of its first 737-8200 aircraft in September. It also expects that it could receive up to 3 additional aircraft from Boeing during the fourth quarter, with the 8-week machinist strike at the aircraft maker now ended. So we have potentially up to 3 additional aircraft coming in just here in the fourth quarter. So this is probably why, again, if they're laying out in their timeline that they're expecting, 2 or 3 more aircraft, then yeah, that's why they're bumping up guidance for the next couple of quarters moving forward on the revenue side. More aircraft means more passengers, right? And also, if, this company, again, goes to a lot of travel destinations, right? We're talking about Orlando, Florida. We're talking about Vegas, Myrtle Beach. So also, again, under the Trump administration, not only can fuel costs come down, which could potentially increase this company's profit margins, but also if Trump is actually able to do some of the things he's saying, excuse me, like getting the inflation in check, making the dollar stronger, increasing the buying power of the dollar, lowering expenses across the board. He was also talking about potentially using tariffs. I know this was just a mention on the Joe Rogan podcast, but again, every idea could potentially be on the table now during this administration. I have a feeling that Trump's mentality has significantly changed just over the last couple of years. Because I think, again, he felt, he might have been wronged. I don't want to go down that road, but he might have been wronged in 2020. And then, he was just kind of trying to, get back in and prove that people like him, and he wanted to be president again. But then I feel like just over the last year or so, the other side may have pushed the envelope too far. And now I think that's why, in my eyes, he's tapping people like Musk, Vivek, and I think they're really going to revamp a lot of the system. Honestly, I think the average person is not prepared, and I'm very curious to see what policies come to place. But anyway, went down a massive rabbit hole. But again, my point coming back to, if he's able to keep inflation in check, again, strengthen the dollar, lower expenses, then, of course, my original point, I'm very sorry, I'm all over the place today. All I'm thinking about is turkey tomorrow, right? Happy early turkey day for all of my Americans. And if you're not American, I don't know, go out, get yourself a turkey sandwich, call it a day. But basically, what I'm looking at here is that Trump also potentially floated the idea on the Rogan podcast of replacing income tax with increased tariffs. So that's why, as well, there are many ways to look at what Trump may do, but basically the gist of what I'm saying and what I'm seeing is the fact that, again, we're trying to get inflation in check. We may see another tax cut. People may have more money in their pockets, which means what? More leisure, more travel, more playing, so to speak. So that's why someone like ALGT may really see a big bump in business over 2025 and 2026 as these policies start rolling out and people can do more with their dollar and enjoy themselves a little bit more. Now, I know that was like a 3-minute tangent for no reason, but I'm sure you understand what I'm trying to say. In a company-wide meeting earlier Wednesday, Boeing CEO, yeah, who cares about Boeing? In addition to recent job cuts, companies burning through cash, yet they kept the stock up. Allegiant Travel, meanwhile, last month reported third quarter loss of $205 a share on revenue $565.2 million during its generally weakest quarter by season. The quarterly results were also hurt by the CrowdStrike outage. There you go. That was the other issue that afflicted a number of carriers in July and effects of Hurricane Helene. So just an unfortunate turn of circumstances for Allegiant, because they did seem like they were just churning along over the last several quarters, just steadily climbing, slowly increasing their business. As we see, we got orders from Boeing, we got more aircraft coming in, we're looking to expand, and now boom, you get hit with a hurricane, freaking CrowdStrike shuts everything down. So, you know, it's just an unfortunate situation, which is why I would say, in my opinion, I'd probably give them the benefit of the doubt and expect them to bounce back. Extends. Here we go. Allegiant Travel adds 44 routes, expands to new cities. It has launched 44 new nonstop routes, including 11 routes to 3 new cities of Gulf Shores in Alabama, Colorado Springs in Colorado, and Columbia in South Carolina. Starting in February, the new flights will expand the airline's network options in 51 cities around the U.S. The airline has also added 3 airports to its network, including Gulf Shores International Airport, Colorado Springs Airport, and Columbia Metropolitan Airport. So we're keeping it domestic, right? We're taking people from, I guess we can say, like the smaller, less touristy cities and states, and we're bringing them to, yeah, you know, go to Colorado, have a good time, and, you know, Myrtle Beach, South Carolina, Alabama, why not? But in my opinion, seems like pretty positive outlook for me. But again, the stock did just rage, and we are potentially in kind of a wedge we can get to in a second. So that's why if we sell off and pull back to like 70, 65, in my opinion, I wouldn't be shocked either. Total system passenger traffic for October declined 17% year over year to about 1.2 million passengers. Year over year drop in traffic during October was attributed to Hurricanes Helene and Milton, which had an, quote, outsized impact on the business. Yep, it was pretty rough. But it's okay because people lost their house. They got a check for $700. Total system available seat miles fell by 9.2% from a year earlier, while departures decreased by 9.9%. Allegiant's estimated average fuel cost for October was $2.52 per gallon. Again, right? We get that down to $2 a gallon. We're talking much bigger and better things, right? That's where my mind's personally looking. Allegiant announced at $83 a share price target by Goldman. Yep. Maintained equal weight by Barclays. Price target raised from 50 to 75. Engineer pilots vote to authorize strike action. Voted in favor of authorizing a strike action if the carrier fails to reach a fair agreement. Said 97.4% of Allegiant pilots voted for authorizing a strike. When was this? This was about 3 weeks ago. Currently in mediation sessions. Allegiant remains committed to negotiating good faith. Offered its pilots an average increase in hourly wages of 50%, with an average 70% increase over 5 years. Okay, that doesn't seem too bad. Again, I don't know. I mean, they might be underpaid to begin with, so a 50%, increase might be like fair value now. But also at the same time, we have to remember a lot of people out there, they go into their boss's office, they ask for a raise, they get like 3% or something. So, quote, additionally, we have offered a significant increase in retirement benefits, long-term disability, and extensive scheduling and quality of life improvements. All right, so it sounds like on paper they're trying to do the right thing by the employees. Nevada-based airline with a market cap 1.3 reported last year, ratified a 2-year extension. 683 workers, line heavy maintenance technician, store employees. All right. Well, it seems like at least when the workers get upset, it seems like they're trying to kind of meet them halfway, if you will, which is more than we can say about some other companies out there. Maintained at neutral by Susquehanna. Again, this was right after earnings came out, end of October. Morgan Stanley lowers price target to 80 from 87, keeps equal weight. So yeah, now we'll look at the technicals real quick. I'll let you go. But we can see, first of all, again, if we go back from this very, very high, look at this, stock was over $270 here at this point, back in early March of 2021. And we can see we've kind of been trending downward since then. But if we go from that peak, 270 roughly in the middle of March 21, connected to the most recent highs that we hit right here back mid-July of 23, even touching that right there, I think, early August 23, and now coming down, cutting across, you can see that just Monday, we popped up and technically got above that top line resistance, and then we pulled back below it, and you can see, look, the next day went right to that top line resistance, and then pulled back, and now today it looks like it's just kind of dancing around, was trying to hold on to that fib level, 81.37, which technically it closed below. So now you can see we ran up, right? And then we dropped hard after these earnings. So we go from the bottom of earnings. That's our support trend line here from earnings. And then, of course, we look at where it popped up to before it stopped. And we connected across the top there. And you can see that, again, just over the last couple of months, now we have kind of like this tightening coming in to this resistance level. So we could potentially get up above some of these levels. As you see here, we're looking like potentially very high 80s, maybe even very low 90s. And then we may break back down to, again, 70 or potentially sub 70 to this support trend line here. Looking like maybe about 67, 67 and a half maybe. So only time will tell, but also if we back up here, you can see we gapped up. This was early February. And you can see right before we gapped up, we hit a high here of 86.84. So in my opinion, that's going to be the next level of resistance above this top line trend line resistance. Now it's going to have to break to 86.84. You can see the stock hit 86.94 and went basically right to that line when it had the flash pop above resistance as well. And then that's where the pullback happened. So first resistance right here, in my opinion, after the rejection, see how we gapped up? This was what, a high of 79.30. So in my opinion, technically, the stock should pull back on Friday to 79.30, meet up with that gap fill, touch the bottom trend line, and then bounce back up. And you'll probably, in my opinion, see it climb up to those resistance levels. And also, after we gapped up, right, you can see we shot right up to 103.47. And then we pulled back, but didn't completely retrace. And then we bounced. So where we bounced off of that level is 89.38. So in my opinion, those are the levels, those are the three levels to keep an eye on now to see if your stock wants to keep going up and then pull back, or if it rejected here and now it's ready to break early. If we have an immediate break, you're probably going to see a pullback to this 20-day moving average, in my opinion. This is a one-year chart, by the way. You could see a pullback to the 20-day moving average here, looking like maybe about 74, high 73s. And then maybe it can bounce and come down to there of about the very high 69s before it wants to bounce back up. So we have to see if it wants to break up above these resistance levels or if we're going to reject hard and now break down out of this potential wedge. So only time will tell, but also you can see that we had pullbacks, multiple tests here along the mid-Bollinger Band on the daily. And we can see now we ran up. So again, if we break down, you can see you're looking maybe slight sub 74, potential pullback to the mid-Bollinger Band there. But 50-day moving average curling up very nicely here over about the last 7 weeks. Now with the movement up, this 200-day moving average is now starting to flatten, as you see, and will slowly curl and climb up over time. MACD's been on the up and up. Yep, cross to the downside, immediately cross back to the upside. So that's why I'm saying they might keep it bullish and want it to go up and retest those levels at, almost 87, almost 89, 91, and then they'll reject it and drop it down. But technically, that would be new 52-week highs, and that would be like, a 10-12% move from today's value. So that's why in the short term, it could keep going, but also if it breaks, I wouldn't be shocked either. The RSI has really been topped out here. We can see on that breakup, it did get slightly above 70 and then rejected, sitting here at 66. Let's look at the weekly. I'll let you go. Weekly RSI, just about that 70 benchmark as well, right? So it's all kind of lining up for a potential little pullback here, a little sell-off. Maybe back down again to the lower 70s. And then it may bounce and try to get back to that 90-plus level. And again, a meetup with that 200-day 116 is actually, that would kind of bring... No, that would technically be a little more value than I laid out. But again, I said, in my opinion, fair value for the business, about 1.9 billion, current market cap 1.5. So a nice 30% run up here would bring you to a little over 100. But again, if we get to the psychological breakout of 100, and then of course we're going to be hitting new 52-week highs, they could potentially keep pumping it to retest the moving average and then reject it. So unfortunately, again, in the short term, technically, you did kind of miss the bottom of the bottoms, and this one just raged. So you could make the argument that it's either going to break out or it's going to break down. But again, something like this, in my opinion, I would try to wait for a break. Low 70s, maybe 70 plus if you can. It's like 66, 65, in my opinion, would be ideal. It would be about half of this run up from the bottom. But yeah, over the longer term, in my opinion, I like it more than over the shorter term. But that's pretty much it, and I'll end it there. So once again, this is Stocks by the Numbers. I want to thank you for stopping by. If you have any questions, comments, or concerns, drop it down in the comment section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. And of course, more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Happy Thanksgiving. Enjoy your friends, enjoy your family, be thankful, and have a good day.